Want to maximise some of the taxes that are currently possibly bleeding out, that you're not really getting any benefit for, then property investment is a great way to do that. So this is how it works, okay? Very basically, if you had an investment property like this for about 400,000, roughly that, around about that value, and it was a brand new property, and you had your tenant in here paying for the loan, you have to think about this as a business. Owning investment property is like having a business. So you have a client, which is your tenant. You have cash flow coming in to your bank account. This represents your bank account, and you have cash flow going out. Okay, so over the course of 12 months, you might be having, for a property like this, around about $20,000 maybe rent coming into your bank account, and you have your loan, interest on your loan going out. So the interest deduction, for an interest-only loan, you might have around about 20 grand going out, roughly. You also have expenses going out during the course of the year, obviously building insurances, rates, things like that, the normal property expenses that you have with your own home, plus property management fees, okay? So they would be all bundled up into that. So they're the kind of expenses that go out during the year. Now, what can happen is the interest on the loan and your expenses can be offset, okay, against your gross income. So if you're on a gross income, and most of you will be on more than this, but let's just, for a simplification's sake, someone on 100,000 gross normally pays around about $25,000 of that in tax, so they net 75 grand. So what happens is when you put this into your accountant, he'll do the numbers, he'll look at it for you, and they find out exactly what's going on with this property over the course of a year, and you can offset your loan, you can offset your expenses, plus you can offset this cool thing called depreciation. So if you haven't heard of it, it means that instead of paying any money out to claim something back, you can claim it back without any cash going out of your own pocket. So in a property like this, it could be somewhere around the $10,000 to $12,000 mark in the first year. You get to offset that against this income, even though you don't pay anything out. So that's all the internal fixtures and fittings and the building itself. So you can offset all these expenses against your income. In this instance, it might offset it down to around about $80,000, which you'd pay around about $17,000 tax on, and you'd get the difference back. So you get $8,000 coming back into your pocket that would normally bleed away, and this helps you run that property. Okay, so you'd have, in this case, you'd have $28,000 coming back in, $27,000 going out. So your net result would be about $1 grand. Okay, that's how you control property, and you can keep doing this. How many of those could you do? Potentially quite a few over a period of time as you let it build up, as you create your portfolio and you reduce your or minimise your tax more and more.